Okay, everybody, it's me, Gregory Mannarino, and it is Monday, August 2nd, 2021. People, I really almost don't know where to start. How about this? Right now, I mean, this is just beyond, it's too stupid. But let's talk about this. Right now, there's a lot of speculation that the Federal Reserve will not be raising rates, cutting back on purchases for like ever. This is the mainstream media now talking about it. Bloomberg, CNBC, Fox Business. And why is this happening? Federal Reserve President Brainerd came out very straightforwardly explaining that our economy is in trouble and the Fed needs to keep on stimulating. It's unbelievable. Look, it's insane. We're booming, we're doing this, we're doing that, and then all of a sudden we're not, and the market gets all giddy. And because of that, stock futures are now higher. Dow futures are higher, S&P futures are higher, NASDAQ futures are higher. But look at the setup for the market this morning. I mean, first of all, let's all get a good duh out, really, duh. Our economy isn't strong. You mean we're not booming? You mean the Federal Reserve is really going to continue to buy assets forever and they're not going to stop? I mean, seriously, duh. We all know this, but it's some kind of game. They're playing a game. You got the propaganda ministry, which is the mainstream financial channels. I don't know what they're trying to pull off. I understand, believe me, that they're reading a script. Their commentators have no idea what's actually going on. They can't think. All they're doing is following a narrative. And it's the same narrative throughout all the mainstream financial channels. It's insane. But what else would you expect here? There's no free thought, no free movement, no free action, unlike this blog where I say what I want. Period. The end. Anyway, so with that aside, I mean, it's no secret to you. It's no secret to me. We have not had one single piece of good economic news in years. But the stock market keeps going higher. So on the back of speculation right now, like I said, that the Fed is going to continue doing what they're doing with no end in sight, futures are higher, pointing towards a higher open for the market. But look at the 10-year yield, people. I covered this yesterday. If you did not see the video that I did just yesterday, my markets a look ahead, I would sincerely suggest you watch it. I covered a lot of important things here. I added a fourth element that we need to keep our eyes on with regard to this market. I'll touch on that right here. But right now, we got the 10-year yield lower. All right, that's some fear here. But the dollar is lower. Why is the dollar lower right now? On speculation, yet again, that the Fed is going to continue buying assets for as far as the eye can see, issuing debt through one door, buying it back through another door. And that's why the dollar is taking a hit here, surprisingly enough. On the back of this, we got gold and silver lower, we got cryptocurrencies under pressure, and crude oil is lower as well. So we have two elements missing from the unholy trinity, for which I added a fourth. Let's cover that. I explain to you always how important it is to watch the 10-year yield. When you see a move like we're seeing now coming down, that means cash is making its way into the debt market on fear. Okay, period, the end. The dollar lower, again, on speculation that the Fed is going to buy it all. I mean, duh, yet again. Really, duh, yet again. Crude oil is lower. Not a great setup. Not a great setup for the market. And our fourth element, which I added yesterday to the unholy trinity, I don't know what I want to call this now, but is the Fed's balance sheet. I've been explaining to all of you since forever, long time. You watch the Fed's balance sheet, the higher it goes, the higher the stock market's going to go. Now, on the back of, the speculation here that the Fed's going to continue buying until kingdom come, and what came out of the mouth of another thing from the Federal Reserve, Brainerd, that the economy is not doing well. The labor market has a long way to go. I mean, all the stuff that came out of her mouth is pointing towards the Fed's just not going to stop. And the market, it's all giddy off of it. But I don't like the setup this morning. So if, in fact, the market does fall, I mean, we'll see. it would be a buying opportunity. It's going to continue to be that way, people, until the 10-year yield, maybe that is the absolute key to the market, until the 10-year yield spikes in an uncontrolled fashion. Every dip in the market must be bought. I don't know another way to put it here. Now that we understand the mechanism here, that the Fed is in fact going to do what I've been explaining to you since time immemorial, that is, buy it all. They're not going to stop with their asset purchases. In fact, they will be increasing asset purchases, especially off of the back of what Brainerd said, okay? You need to be on the opposite side of this trade, people. That means betting against the debt, becoming your own central bank. And what does that mean? Holding hard assets, physical gold, and especially physical silver. And I also believe cryptocurrency needs to be in your portfolio if you can deal with the wild speculation in that space. It's not for everyone. Trust me, I know that. Okay. So that's really the setup today. Let's see how the market responds over the next several days. What's going to happen is this. It's very simple. The market's going to sit back, or investors are going to sit back and say, all right, what did we just hear from this Federal Reserve president? We're not getting any good economic news. Our economy is essentially in collapse mode, and the Fed is going to continue to buy assets. All right. So there's a complete disconnection between the stock market that keeps going up and the economy that keeps, is falling. There's no recovery in sight. You can expect more stimulus, more cash created out of thin air, and the Fed's going to buy more assets. Period. The end. That's it. So what does that mean? Stock market higher as the economy free falls. It's that simple. It's that simple. I really don't know another way to put it. It's very easy for you and I to understand what we need to do. Across the spectrum, people, of asset classes, I am really keeping you all on the right side of this market. Understanding the dynamics behind the market, what's really going on, what's really driving it, how to gauge where the market's going to go by looking at the 4 elements. Okay, 4 elements now. 10-year yield, dollar index, or the Dixie. These are all set up for you right on my website, traderschoice.net. There is a link in the description of this video. Crude oil, crucial to the energy sector and the financial sector and the Federal Reserve's balance sheet. And we're at like we're going up to 9 trillion in a very short period of time. Count on it. Count on it. Anyway, look, I think you all got the situation. You know what's going on here. Anyway, people, yesterday was the first of the month. I did ask those of you who believe you want to support my work to do that. I want to give you a big shout out to those of you who chose to do it. And if you, again, want to support my work, and I'm not counting on you to do it, there is a link in the description of this video. You can support my work. On the first of every month, I ask for your support. I say, just send me $5. If you want to send me crypto, I love crypto. You won't know that. There is also a link for that. Anyway, people, let's make this happen. We know what we need to do, why we're doing it. And it's just crucial in this environment of fakery, the criminality, fraud. Anyway, it's a freak show, and you all know that. People, this guy loves you a lot. I will see all of you at the end of the day, and we'll just sum it up.